Setup Monday here at Brave New Coin. Let's take a look at some charts. Start with the majors, work our way down to some altcoins which are having much more fun than BTC and ETH. For BTC, nothing much has changed. I mean, it's so sideways it didn't even want to break down from the rising wedge. So we hit this rising wedge coming off of the lows and made it through the cloud, made it above the cloud, made it through the 200-day moving average. And the cloud is yet to flip bullish here. That's the red fill you see in the background here. How this works is you want everything on the cloud to be congruent with one another. So you want all of the faster moving averages to be moving higher and above the slower moving averages. Pretty simple, really. So you want the TK lines to look like they do when things are bullish, which they do, but you want the cloud to be bullish as well. So this just says for this time frame, these settings, we haven't yet completely flipped from the lows just yet. Things look very optimistic, things look good, but we're not quite there. So the entry based on this system says wait for the bullish Kumo twist is what it's called. And one other thing, oh by the way, you don't want any of these averages to ever be thick or spread apart. When the cloud gets thick, that's problematic. That says things are probably slowing down, just as they did at the bottom. We got a range, cloud got super thick, and then that edge-to-edge trade develops. Same thing at the top. We developed a range at the top, cloud gets super thick, we fall through it. You don't want the TK lines, these blue and the red lines, you don't want those to be super spread apart. This is also a signal of overbought conditions in the near term. So in a perfect world, you get your Kumo breakout with a bullish cloud and TK lines that are barely spread apart, just starting to move. So there's a caution here that it's a better buy to wait for a pullback somewhere probably around 40, 42 than to even pay attention to this Kumo twist and say, yeah, it's go time right now. Because we're just so overbought so quickly that this thing may go sideways all the way to October. I mean, that's probably the dream. That's the most painful thing for most people. A lot of people are going to get impatient, jump out, whatever, do whatever else, but that gives the moving averages time to zero out, as I say. That gives time for the 200-day moving average to get closer to price. So support rises, everything flattens out, oscillators calm down, and then we get the move. Then we're ready to reestablish bullishness because we just got so bullish so quickly. We kind of lost all our momentum. At least it feels like it anyway. So yes, you could long on the Kumo twist, but ultimately we're still pretty far above the mean, which is basically 40 to 42. And if we get down there, I think it's a dip buying opportunity. ETH, very similar situation. Very bullish very quickly. Now it's consolidating in this range. The mean, the average is telling you 2,500 is where you want to buy. Even though this breaks some rules in that, do we enter a bearish edge-to-edge trade, right? Like, do I expect this to go all the way to the end of the cloud to the bottom side? I don't, but it's possible. It's not my expectation. My expectation is if this stuff breaks down, it goes to the Kijun on both of these charts. So 2,500 here. ETH needs a little more time for the cloud to flip, but it will probably flip as well, bullish. Just some basic supports here as well at 29, and then a lower support below 25 at 23, where we broke out of the W. So if we break down on both of these, I'm not worried at all. Tons of volume on both of these as well on the way down. So it's not like there isn't any support. We're cliffing in a sense that I'm expecting this, if it breaks down, to move substantially lower, but it's not like we're risking breaking 2K or anything. You know, maybe it's a wick to 25, maybe it's a wick to 42K. I don't know. But I'd much prefer that than breaking out here. Not saying we can't, and I'm not saying up or down. It's just, it's an indecision period. So if we break up, then you buy. If we break down, you buy more. Right? That's my strategy anyway. ETH-BTC on a 3-day pitchfork volume. It had a pattern, arguably bullish pennant or flag or something, and it's broken out, went sideways, broke down, starting to break up again. I think ultimately this does get to 0.1-ish eventually. ETH has never outperformed BTC in Q4, so I hesitate to say that'll happen in Q4. Not saying it can't happen, but seasonality does dictate it does not happen in Q4. So that would be an anomaly historically for ETH to outperform BTC in Q4. But overall, I think this is bullish. I just think it's untradeable. Unless there's some mega macro pattern or trend going on, this thing is just always all over the place. I don't know anybody who just trades this by itself. It's just too tough to trade. DeFi perps looking good. We had the W like everything else, bullish cross. Now we're back in the range and we're kind of just waiting. This may break down to the 200-day moving average even, but it's in a healthy volume area where I'm not super concerned. What you don't want to see in the next week is any breakdowns below the 200-day moving average. If we break higher, that's kind of expected because bullish continuation is the name of the game right now. But with gas prices so high, it's potentially difficult to get people into the ecosystem and to stay in the ecosystem. I mean, why would you play around with anything on ETH when you can do very similar stuff on other chains for cents on the dollar currently? So there's this Goldilocks principle between keeping gas high enough to burn ETH through EIP 1559 so that we're sort of disinflationary, while at the same time not pricing people out because gas is so high, they just go elsewhere or they do more stuff elsewhere. NFTs have a lot of liquidity right now, as do non-ETH stuff. Fees are high on ETH because of NFTs. NFTs are very much in the zeitgeist consciousness of internet savvy people, whereas DeFi is not. DeFi is expensive right now to people, and people are getting priced out. So it's a very interesting dynamic between NFTs and DeFi going on currently. The best setups, I think, are still SNX as far as breakout potential. Not yet. Bullish cross here, has not broken above 13 in a big way yet. So I'd still watch this one. I think this one still looks good for bullishness. I think comp USD as well. It's looking less and less probable that this breaks up, but if it does, it wouldn't surprise me. I'm still holding my positions. I'm still holding the positions on Enzyme. That hasn't changed. As a matter of fact, we rotated more into comp and SNX with the expectation that this stuff moves up sooner rather than later. And I like 650, 730 for comp, and SNX I like 18 to 21. Basically the previous ranges for both of those previous all-time highs. Reason being, everything else has kind of moved around it, whereas comp and SNX haven't quite broken out of their ranges. They haven't revisited their all-time highs just yet. Something else to continue watching, as sad as that makes me, is Doge. Kind of for two reasons, just retail mentality. It's interesting that GME and AMC both broke out last week, whereas Doge did not. So if that's getting decoupled from the Robinhood consciousness, that could be a problem for Doge going forward. I mean, I doubt that's the case because this stuff typically will move together. So if you're bullish Doge, what you want to see is a W at 600 sats and then a move above the cloud on the 12-hour. Right now the cloud is thin, so this is the type of thing you want to see in the BTC and ETH and the large caps. You want to see just a thin cloud, TK lines very close, price slowly drifting above to 620, 700, whatever it is, and then it'll take off, right? Right now, we could potentially be refueling the rocket. I don't know, but it's worth watching because if this gets above the cloud again, I think it'll be bullish. Otherwise, the floor is 100 sats. I mean, that's the historic resistance for years and years and years and years. So that eventually, if this thing breaks down, that's where it's going. Solana broke 100, broke 60, reconsolidated, broke up, kind of where all of the fun is happening at the moment. Not a lot of volume though in Binance, which is kind of weird. Definitely a bear div on that. This did have that triple bottom on the 200-day moving average, broke up kind of with everything else and had the rising wedge, but kept going. So pretty much everything had a triple bottom or a type of triple bottom. And clearly there were overperformers, Solana, FTX, AVAX as well. I think I have that on here somewhere, AVAX. A lot of these charts triple bottomed and then retraced basically to all-time highs already. So for Solana, the next target I'd watch is 2618 fib from high to low here, which is around 120, 130. But eventually, this thing is up 5,500%, so 5,500% since January. Eventually, what goes up must come down. So keep that in mind. Be responsible, blah, blah, blah. Don't get wrecked on max leverage if this thing starts crumbling. Don't be surprised. One interesting thing, this is the half year MA because you don't have enough data really to look at the full year or 2 years, but if we look at the half year MA and the multiplier, thus far, it's an N of 3 or 4, but bottom here, top here, top here. The next top is basically 180, 190. By the time it gets there, probably around 200. So this could still have a 2x left in it based on historic price action, which is insane to think about. But I wouldn't rule that out of the table, rule it off the table. So, I'm not going to be shorting this either. What are you doing? You're shorting all-time highs, right? It's usually a bad thing for your P&L. People who short all-time highs are reasons why this price keeps going. They get margin called and it goes higher, right? And then the people who are short with more collateral get margin called and the cycle of life continues. This thing goes to 200. As far as AVAX is concerned, looking more and more M double toppy on the daily. This doesn't look too bullish to me at the moment. Moving average is still like 33, 34, 35, somewhere down there. The cloud likes 2650. This may consolidate bullishly eventually, slowly, but as it stands today in this moment, I wouldn't be bullish on this. This is M for murder, as the kids say. So if it were me, I would be jumping out of that one. Maybe rebuying. You could always jump out of this stuff, take profit, put bids lower with the initial buys that you had, right, to just get it back, and then the profit is yours. You split the difference between 43 and 33, whatever. That's one way to protect yourself. Not investment advice, just a strategy you can employ to protect those sweet, sweet profits. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything including AUM, performance, allocations, all of the yield plays I'm in here. You can see all the trades I make at the bottom. As fund and portfolio, we eat the gas fees for all this stuff, which is with one attraction, I guess. There are fees for this as a user, 2% per year, 20% on any profits made above the high watermark. Currently, the high watermark on this is like $1.10 or something. I don't know. So this is very underwater currently. And the high watermark on this is probably $1.50, $1.60. I can't really remember when we last took profit. Probably it's somewhere over here, 156 or something. But anyway, you could always trade this. You could trade this as a coin itself, trade the shares as a coin if you want, I guess. But if you're curious, if you want to jump into DeFi without spending a bunch of fees or knowing what to do and when, you can just watch what I'm doing too. That's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.